Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 27th of October. Riksbank to keep rates unchanged for now. Sweden's inflation profile has deteriorated since Riksbank last gathering. Both the headline and the underlying inflation rates unexpectedly declined in September, raising bets that the world's oldest central bank is not done easing yet. We believe that the bank will indeed ease further, but not at this meeting. We expect the bank to wait until its December gathering, mainly because we believe that the situation is not dire enough to trigger a knee-jerk response. Although inflation is notably below the Riksbank's forecasts, both Euro-SEK and dollar-SEK have surged since the Brexit outcome, which could lift imported inflation in coming months. What's more, the Riksbank tends to follow the ECB's footsteps on fears of Euro-SEK sinking, and given that the ECB prefers to wait until December, Swedish officials are likely to follow suit. However, we expect the bank to maintain a very dovish bias, preparing markets for some form of action in December. The Norges Bank gathers to decide on policy as well. Norway's inflation rate declined notably in September, opening the door for further easing. Nevertheless, recent comments from Governor Olsen support that the bank may be done easing for a while, at least in the absence of a sharp appreciation in NOK or consistent disappointment in the economic data. The governor said that over the past year, the bank has reacted less to new information, mainly due to the increased uncertainty about the effect of ultra-accommodative monetary policy. As such, we don't believe that the latest slowdown in inflation will lead to any action, particularly as both the headline and core CPI rates remain above the bank's target. In line with this, we expect officials to maintain the overall neutral tone seen in the latest policy statement. Besides the two major Scandinavian central bank policy decisions, we have important data points from the UK and the US. In the UK, we have the first estimate of the Q3 GDP coming out. This will be the first set of growth data concerning the post-Brexit era. The forecast is for growth to have slowed to 0.3% quarter over quarter from 0.7% in the second quarter. The forecast is supported by the NIES monthly estimate of GDP, which suggests that output grew by 0.4% quarter over quarter in the third quarter. What is more, the depreciation of the pound is likely to dampen consumer spending. On Tuesday, Bank of England Governor Mark Carney said that the inflationary impact of the rapid depreciation of the pound could encourage him to vote against any further interest rate cuts or other monetary stimulus. The governor also added that there were limits to the bank's willingness to look through the inflation rising above its target. As a result, although a slowdown in growth may revive some expectations for further easing in the foreseeable future, we don't expect something like that to happen at the bank's upcoming gathering, scheduled next week. From the US, we get durable goods orders for September, initial jobless claims for the week ended on the 21st of October, and pending home sales for September. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.